Management companies. During our session today, our learning objectives are to cover management company characteristics, discuss the structure of management companies, and finally we'll talk about voting for management companies. So before we get started, remember there's two main management companies. They're open-end funds, which are also called mutual funds, and closed-end funds. The difference in these is capitalization. One of the things that we can do is take a look at compare and contrast the difference between open-end and closed-end funds. Open-end funds, again, are the only ones that are considered mutual funds. So a prospectus is required on every new purchase, and it is constantly and continuously offered by the fund in the primary market. So the fund company will make new shares available if you want to buy, and they'll stand ready to buy back your shares if you're ready to sell. You redeem them directly with the issuer. Whereas with a closed-end fund, they require prospectus during the IPO phase. Once all of the shares are sold out on the primary market, it then will trade in the secondary market based on supply and demand. Just like a stock or bond in the secondary market. Regulated under the Securities Exchange Act of 1934, the second act coming after 33, regulating the secondary market trading. And the difference in these two is the idea of capitalization. This is what the shareholder gets as or receives as proof of ownership of their fund. So it's proof of ownership. So if we buy into a mutual fund, every owner of a mutual fund or an open-end fund gets a common share of the fund. And that's all they can issue. They can only issue these common shares, and that's it. For a closed-end fund, once all the common shares have been sold, they can then offer preferred shares or bonds on the closed-end fund. And how they're priced is also different. A mutual fund, you buy at the public offering price, or POP, and you sell at the net asset value, or the NAV, which is always done through forward pricing, at the end of the business day computed, then regular settlement. And then a closed-end fund trades in the secondary market and is priced on supply and demand. So what is a fund structure? A mutual fund or closed-end fund first will have a board of directors. 40% of the board of directors must be disinterested members, meaning their only affiliation is by being a board member. They become the voice of reason. So we'd hope the disinterested parties would, if something was wrong, they'd hopefully step up and do something. Affiliated board members are those that are also affiliated with the board of the company. Interested, maybe they work as a tax advisor to the company or hold large amounts of stock. Disinterested board members, their only association is by being a board member. And they become our voice of reason. So the board of directors basically is the overseer of the day-to-day operations of the fund. They make sure that everyone at the fund company is doing their job ethically. So now let's take a look at the investment advisor. One thing I want to make sure that you guys are comfortable with is that this is a firm, an unnatural person, not an individual. Natural people are living, breathing human beings. We're so used to people at work calling our financial advisors investment advisors, but really they're investment advisors' representatives. So on any exam, whenever you see investment advisor, assume it's a firm or an unnatural person. It meets the ABC rule. That means that they give advice on securities as its business, and they are compensated for the advice that they're giving. Investment advisors are hired by contract. That's a 2-year minimum that can be renewed annually. And investment advisors earn a percentage of assets under management for managing the portfolio. And typically it's like 0.5% or sometimes 1% of the total assets under management. Doesn't seem like a whole lot, but it certainly adds up with our big portfolios. So we've talked about the board of directors. We've talked about the investment advisor. Now let's talk about the custodian or the custodian bank. Typically it's a bank that safeguards the assets of the fund, and they receive a fee for the safeguarding of those assets. They do a lot of back office tasks, and they do not have direct interaction with investors. Next, let's talk about the transfer agent. This is the processing agent for a fund, so they issue and redeem shares, do dividend distributions, do clerical functions, and they do all those front office tasks, and they do interact directly with investors. Then we have the wholesaler. This is the team that markets the fund shares to broker-dealers and directly to the public. They're also referred to as the sponsor, the distributor, or the underwriter. Broker-dealers are going to sign a selling group arrangement with the fund's wholesaler in order to offer those funds to their investors. Lastly, shareholders have the right to vote. So a majority vote is needed. If it's needed, they can vote to change the objective of the fund, change the fund from an open-end fund to a closed-end fund, to buy or sell real estate, to make loans or deviate from the investment policy, adopt or even increase an existing 12b-1 fee, borrow from a bank that is an open-end fund, and issue preferred stock or bonds if it's a closed-end fund. So in our quick session here, we've talked a little bit more about our two main types of management companies and their characteristics. We've went over the management company's structure and talked about the board of directors, the investment advisor, the transfer agent, and the custodian, as well as the wholesaler, as well as the right for shareholders to vote and in which manner they do. That concludes our session today. Go over to millionairesintraining.com and take our structured simulated exams, read your explanations, and move forward to the next chapter video. I'm Colin Kleck, representing millionairesintraining.com. I'll see you in the next video.